Hey, order flow community. Wanted to take you through today's setup, but really the setup and process that I've been using over the past, however long, um, related to auction market theory and obviously order flow. What you see in front of you is a NASDAQ futures 2000 tick chart. I have a couple of things on the chart. We'll focus on this first one, which is the overnight value area. I find the overnight value area really important for day trading purposes. I love getting trades done as not as quickly as possible, but I like getting them done in the morning so that I can not stare at charts for the rest of the day. And using the value area provides me with like a launching point or like a decision point as to whether the overnight value area is going to be accepted or rejected. So I'll show you what I mean by that. So we had a huge sell-off overnight, and value actually only built up towards 1 in the morning, where price basically stabilized. And if we print a volume profile, you can see what I mean. This is the distribution of where the majority of trades took place. You can see that it's heavily skewed towards the downside. So then we have price that opens up inside of value. And then what we're going to do, this is around 9:30 or so when the market opens. And what I'll do is I'll just kind of quickly fast forward a little bit here, and I'll just show you how the how volume builds up throughout the session. So we're at like 9:50 at this point. We're still within value. What I would look for is a couple of things at this point. I would either look for a day where value is balanced and we're going to ping pong between the value area high and the value area low, just like it did in the overnight session. So you notice that it's ping pong from one end to the other. Now, obviously, these aren't trades that you can take because the value areas, the high and the low, aren't established yet. But you'll notice that price always ping pongs between the top and bottom of value areas. It does that all day, every day. So it's bouncing back and forth, and you need to have reason to believe that that behavior is not going to continue, right? So what I would typically look for is saying, okay, well, if I have some kind of clue that the value area high is going to get rejected again, like it did a few times over here, I'll look for a short and a rotation back to the value area low. That's what I'll look for. In this case, I didn't get that, right? I didn't get any confirmations that the value area high was going to hold to the downside or hold price below it. In fact, the opposite happened. It ripped to the upside. Now, I'm not a breakout trader. I always get caught with my pants down when it comes to breakouts. I get faked out, and I just kind of let the breakout happen, and then I try to just trade the rotation, which is a lot more high probability. So that's what happens, right? So price just sort of breaks to the upside, and what it ends up doing is it starts creating a new value area up on top. So as I'm dragging this to the right, you'll notice how there's a new value area that's being established. And again, price is starting to ping pong between the top and the bottom of that value area, up and down and up and down. These are great trades that you can take. Maybe not the top. You don't know how low it's going to go, but once this bottom has been established, you can very often trade the bottom back to the top. These are small trades, but they're pretty high probability. Again, if you know what to look for in terms of order flow. Now, the reason why I didn't do that, although these value areas are nicely established, is because I saw something very interesting from an order flow perspective, which is really, really telling. So as price is making higher highs, so prices, you notice price is going up. I have a little chart at the bottom over here that's called cumulative volume delta, and this basically shows me the difference, the net difference between aggressive buyers and aggressive sellers. Um, Typically, in like a healthy trend, price, but the price chart that you see up on top and the cumulative volume delta chart look practically identical. As one goes up, the other one should go up just as cleanly. And as one goes down, the other one should go down just as cleanly. When you have a divergence, it tells you that there's something up or there's something wrong. So notice what happens here. I have a higher high, right? This is one level, and we're the next, I guess, 10 or 15 minutes later, price exceeds that. And what you would expect is that we would have aggressive buying follow suit, right? But notice how aggressive buying is basically starting to dry up quite a bit, right? So although we have a higher high in price, we have a lower low in lower high, I should say, in cumulative volume delta. So that made me not want to take any of these value rotations. That made me think that there might be a chance that we rotate back down. These volume nodes are very much like gravity. In order to break gravity, let's say you have a rocket ship and you're trying to get to the next planet or whatever, the only way you can break Earth's gravity is with force. You need lots of rocket fuel. You need thrust to get there. So notice how we got that thrust to get to the next value area, but it's almost like our ship ran out of gas and it started falling back to Earth or this volume node. Hopefully you get what I mean. So now let's fast forward here, right? We're losing gas, or we're running out of fuel, and now we're basically at a point where we've re-entered the value area of the overnight session. And remember what I said a little bit earlier. The price likes to ping pong between the high and low of an established value area. So once I saw this happening, I went short, quite simply. And let me just turn on a couple of things in terms of indicators that help me seal that decision. And I'm just going to print this and just move this over and show you how the trade was taken and risk was managed. So like I said, as soon as we got this value rotation, or this entry back into the value area, I thought to myself, there's a really, really high probability that we'll just end up ping-ponging, like I said a little bit earlier, or rotating is the right term to use, back down from the high, back down to the low. Now, I use some of these order flow indicators to help me manage risk. The one that I've been using quite often lately is this big trades indicator. So big trades shows me obviously very, very large market participants. You can see that you had a whole bunch of, huge institutional players that came in and dropped 111, 100, and 123 NASDAQ contracts. The notional value behind that is just absolutely insane. And that's what helped push the market down. Now you have to kind of think from their perspective. If you have these big players entering the market, there's a really good chance that if price tries to make its way back up, they're going to defend their position. So what I did was, as soon as the value area high was broken, I entered and I placed my stop loss. So this is pretty much where I got in at the low of that candle. And just from a risk management standpoint, I put my stop loss right above this big trade. And like I said a little bit earlier, what I looked for was a full rotation Oh, oops, that's a long. Sorry. Looking at that, I'm like, what's wrong with that risk reward? It's a short position. Is that what I'm looking for? That looked so messed up. Okay, so I got in here. And let's rotate all the way down. Right. Okay, and then my stop was just here. I took a little bit of heat. You can see that price retrace, which is normal because you have this big volume gap. This is called a low volume node where price basically can cut through very, very quickly. So I said, let me put my stop loss behind this big trade over here. And let me just write it down. So this ended up being a really, really nice trade. We'll call it the better part of 2-to-1 risk reward. And that was the day. I mean, that was a sick trade, to be honest with you. I was super proud of myself. So that, hopefully that gives you an idea of some of the auction market and order flow logic that I used to enter. It was basically the idea that price ping pongs from one edge of value to the next, and price will do that as soon, not maybe not as soon as it enters that value area, but using order flow confluences like cumulative volume delta and some of the big trades to manage risk, help me help help they help quite a bit when it comes to figuring out, is this trade high probability or just sort of nonsense. Anyway, hope that was helpful. Drop some comments in the YouTube video or whatever if you have any questions. Later.